Good afternoon, everybody, and welcome to our 60 mark depreciation straight line question. So this is, I think, the 2024 paper, and we got a straight line depreciation question, 60 marker. Let's have a quick look. So depreciation of fixed assets, straight line. Now, for the first time in a long time, they have included scrap in the question, so we're going to have to deal with that. That is a step up in complexity to, say, the more standard straight line depreciation question. There's a typo in the question. It should say here on the 1st of the 1st 2022, so just bear that in mind. 1st the 1st 2022, the trucking company owned 3 trucks. Then in 2022 we got rid of number 1, and number 1 had a refrigeration unit or an RU fitted to it, so we will deal with that. We also have, they're the main things that happened actually in the first year. In the second year, so we disposed of vehicle 1 or truck 1 and the RU, and we bought a new truck. So we bought truck 4, new truck 4 2000. In the second year, we get rid of truck 3 and we're going to buy truck 5. Okay, so we're going to have 5 trucks and a refrigeration unit linked to truck 1 in the mix for this question. 60 marker, they're asking for the truck account, 6 marks, provision for depreciation, getting lots of marks, 32, and the disposal account. So we'll be doing 2 disposals, 14 marks. And then we have theory. So 8 of the 60 marks, which is about 13% of the question, are going for theory. So we must know our theory. We must have good financial literacy, and we must write lots to get those precious marks. We're not talking about those today, though. I'm assuming that everybody on this video is very au fait with the ordinary level depreciation, so we'll be doing the question at a higher level pace. So let us get ready to start. Let me clear out what's in here and we'll get cracking. Okay. All right. So first things first for us, guys, we need to get our tables ready for depreciation. So in the same way as reval, for higher level, we are required to create tables in order to calculate the depreciation for the year. We're being asked for just 2 years in depreciation versus 5 years in revaluation. But calculations are trickier in depreciation, so we really got to watch the calculations and take care with them. You're going to create 2 tables, one for our first year, 2022, and one for our second year, 2023. Please learn the layouts of the tables really well. So we're going to put the vehicles here, the age of them, the cost of them. We've got a section for the depreciation and a column for the pieces that were disposed of. So learn your layouts really, really well. Laying out the answer, please start on a double page. On the top left page, we're going to have our 2 depreciation tables, year 1 and year 2. Please allow about 16 lines for that. Okay. Then underneath our depreciation tables, you're going to draw your T account for your asset. So in this question, our asset is a truck. So you're going to draw your little T account. You need about 10 lines for that. Okay, so you'll have your tables and your truck account on the left page. Then on our right page, we're going to have provision for depreciation account. Again, leaving 10 or 12 lines for that. We only have to do 2 years in depreciation questions. So 10 or 12 lines. And again, 2 disposal accounts. So the disposal on the first year and the disposal on the second year. And you need about 5 lines for each of those. Okay, so you'll get all your accounts and your table in and on a double page. In this particular question that we're doing, we also needed to do another little table in order to calculate. We had to exclude our scrap when we were calculating the depreciation. So you needed another little table, another little extra table. So I suppose read your question really carefully when you start, and then I suppose, lay it out accordingly. Now, when we're filling out our table, please remember that the there is always an additional fixture on one of the assets. So in this case, there's a refrigeration unit, which I'm calling an RU, fitted to vehicle number 1. So we're going to put those together in our little table when we're making it there in a second. Read the question super carefully. Take note of the method of depreciation. Is it straight line? Is it reducing balance? Is there scrap? Scrap has to be excluded when we're doing the calculation, which we'll be doing there in a minute. So take your time in the depreciation question and don't make errors, as that is my just massive advice to us. Just read it carefully at the start. See, is there any kind of sneaky things in there? Depreciation isn't the hardest thing in the whole world. So I suppose the questions in the past few years have been coming a little bit more challenging so that the well-able student can be challenged. Okay, now we're going to start populating our table. We're just going to do year 1 and do our double entry and balance our accounts for year 1, and then we're going to do year 2. That's our approach. The biggest error, or the most common error that we make, is counting the age of the assets. So please be careful in relation to that. Do all of your finger counting, as I call it, for your assets at the same time. Just do all the aging of the assets first, and then you can do all your calculator work together the second time, because you're going to be more accurate than if you're switching and swapping, and you're going to be faster as well. And time, of course, as we know, is key. Okay, so let us, without further ado, start. So our first table, table 1, we've got our vehicles. I call everything vehicles, as you'll know from my other videos. These are trucks. So here we're going to have truck 1. Truck 1 has an RU fitted to it. We're going to have truck 2. We're going to have truck 3. And then we bought truck 4 during the year. That's all that's in the mix for the first year. Then we're going to calculate the age of each of those assets. And we're going to calculate we're going to enter the cost of each of the assets. So we'll just pop in the costs first. So just reading our question there. Yeah, just reading our question. So truck 1, 55 grand. Oops. The RU, so popping down to the RU. Truck 1 had a refrigeration unit fitted on the 1st of the 1st, 2019. The cost of the refrigeration unit was 22,000, and there was an installation cost of a further 2. So we must include all of those costs in the cost of the asset. So it's the fully delivered cost of the asset we need to include. So 22 plus 2, 24,000 for the refrigeration unit. Truck number 2, 68,000. Truck 3, 72,000. And truck 4, which we traded in, number 1 and the RU got traded in, and we got truck 4 for 82,000. Okay. When you're calculating the opening balance for your asset, we are not including truck 4 because we didn't have it at the start of the year. So when we're calculating our opening balance for our asset, we're just including truck 1, the RU, truck 2, and truck 3. So our opening balance for our asset is going to be 219,000. Okay, so it's just the first 3. So please put a note under your table with the opening balance of your asset in it, like same. Okay, now we're aging our asset. So what we want to figure out here is what was the age of the asset on the 31st of the 12th, 2021, because our new year starts on the 1st of the 1st, remembering the typo, 2022. So our year starts on the 1st of the 1st, 2022. And so we want to know what was their age at the start of that year, which is what was their age on the 31st of the 12th, 2021. That just makes the counting a little bit easier for us, and we go a little bit wrong. Students go wrong frequently in this step. Okay, truck 1, bought on the 1st to the 5th, 2018. So in 2018, we had for 5, 6, 7, 8, 9, 10, 11, 12. We had it for 8 months in 2018. So 8 months. And then we had it for 2019, 2020, and 2021. So we had it for 3 years and 8 months. Okay. Use your fingers to do the counting here, guys. It's too important to get it wrong. Okay, take your time, do it well. The refrigeration unit was fitted on the 1st of the 9th, 2019. So we had it for the 9th, 10th, 11th, and 12th. So 4 months in 2019, and then we had it for 2020, 20 and 2021. Excuse me. We had it for 2020 and 2021. Come right there now. Yeah. So that's 2 years and 4 months. Okay. Truck number 2. We bought it on the 1st to the 4th. So we had it for 4, 5, 6, 7, 8, 9, 10, 11, 12. We had it for 9 months. I am counting it with my fingers. Okay. And then we also had it for 2 years, 2020 and 2021. So 2 years and 9 months. Vehicle 3, we only bought it in 2021. Okay, so we had it for 6, 7, 8, 9, 10, 11, 12. So we had it for 7 months. So 0 years and 7 months. Okay, and this guy is not applicable because we did not have him at the start of the year, which means there will be 0 opening depreciation for them. So we can put 0 in there. Okay, now we got to calculate the opening depreciation. In a kind of traditional straight line depreciation question, that would be very straightforward for us here now. The depreciation is 10%. So in a traditional question, you'd just be going 72,000 by 10% and divide by 12 and multiply by 7. That's what we would be doing in a traditional depreciation question. However, the examiner has made it a little bit harder for us this time around by informing us that there was scrap of 10% in the estimated, which we must exclude from our calculation, and then telling us, apologies, it's not 10%. There was scrap of 10%, excuse me. The scrap of 10% in the question, which must be excluded, and they're telling us that the depreciation policy is to do straight line depreciation over 5 years. Okay, so we're doing it over 5 years. So that's slightly different wording to what we would previously have had. So we're going to create a little table to help us to calculate our depreciation for these vehicles. Okay, so I have our little vehicles across the top. Vehicle 1, the RU, vehicle 2, 3, 4, and 5. And then I've put the cost into each of them along there. Then we have the scrap percentage. So 10% of it is scrap. We can't include that in any calculation. So we have to deduct the scrap. Okay, so minusing off the scrap gives us the number that we're going to write off over the 5 years. Okay, so I've done that for each of the vehicles, each of the trucks. I'm obsessed with calling them vehicles, just take no notice. And then they're saying over 5 years. So the same amount each year, which is what straight line is, over 5 years. So all I'm doing here now is I'm saying 49,500 divided by 5. Okay, so let me populate this table now for you because I had it pre-populated and I shouldn't have really. So this is my cost, which we just talked through. We're going to be taking 5% divided by 100 multiplied by 5. 5% off of each of these guys. And then we're going to get the value from which we're going to perform our depreciation. Sorry, no, I didn't do that right. Scrap is 10%. Apologies. Our scrap value is 10%. So I'm getting 10% divided by 100, multiply by 10. 10%. And that's coming off the value of our vehicles. Okay. Lovely. So now I'm getting my little value of my trucks excluding that scrap. So 95% of the cost of the vehicle is all that we're allowed to consider for depreciation. And we're going to write that off over 5 years. So every year we're going to be putting 49,500 divided by 5 into our P&L to show the reduction in value of the asset over its useful economic life. Notice that I have the RU listed, but I am not using that calculation for the RU because RU is following a different depreciation process. And we'll talk about that after. We'll do everyone else first and we'll come back for the RU. Okay, so 9,900 per year for truck one. Okay, so I'm going to have 9,900 times 3 full years, and I'm going to have 9,900 divided by 12 and multiplied by 8 months. So 3 years and 8 months. That's my opening depreciation for truck one. Okay. So truck two, I'm skipping the RU for the moment because it's a different depreciation policy for that. So truck two is going to be 12,240, which is our annual straight line value for truck two, multiplied by 2 years. And then I'm going to have the 12,240 divided by 12 and multiplied by 9 months because it's 2 years and 9 months. 33,660. So 2 years and 9 months. So 2 full years of 12,240 over here for vehicle 2 and then 9 months of it on top. Truck 3. So truck 3 is just going to be 7 months. So we have 12,960 is 12 months divided by 12 and multiplied by 7. So 7 over the 12 months. So 7,560. Truck 4 has nothing because we didn't buy it until during the year, so there was no opening depreciation at the start of the year. Then we have the RU. So in all depreciation questions, the RU or the GPS tracker or the tachograph or whatever it is that has been fitted to an asset usually has a different depreciation story going with it. So reading the question carefully, the cost of the refrigeration unit was 22 and they added 2, so 24. Note, refrigeration units are depreciated at 20% of cost for the first 2 years and 10% thereafter. There is no mention of scrap here whatsoever, so we're going to ignore, we're not going to apply that scrap value at the top of the question to this because it's a different calculation entirely. So we're going to do exactly as they said. We're going to do 20% of cost for the first 2 years and 10% thereafter. So the age of our RU is 2 years and 4 months. So we're going to have 20%, we're going to have 2 years, the first 2 years at 20%. Okay, so it's going to be equal to 24,000, the cost of the vehicle, by 20% by 2 years. So 2 years by 20%. Okay, make sure I did that right now. So 24,000 by 20% for the first 2 years. Yeah, by 2 years by 20%. Okay, and thereafter, apologies, and thereafter at 10%. So then I'm going to have 4 months plus 24,000 multiplied by 10% and then divided by 12 and multiplied by 4 months because I've got 2 years and 4 months. Okay, so when I'm adding those together now, I'm getting 10,400 as our opening depreciation for the RU. So the first 2 years at 20%, the first 2 years at 20%, and then 4 months at 10%. Hopefully you're okay with that now. So my total opening balance for the RU is 10,400. Okay, so we have all our opening balances for each individual vehicle, adding it up and getting our opening balance number for our provision for depreciation account, which we'll be doing when we get to the double entry stage and the T account stage. Okay, so that was a tricky one, guys, I'm not going to lie. Okay, so each of the 4 trucks, we had to deduct the scrap and divide by 5, and then we had to calculate it for the number of years and months correctly. For the RU, we had to do the first 2 years at 20%, and everything after that at 10%, which is 4 months. So great care needed. Please take your time when you're doing this part of the question. You can make up your time afterwards when you're doing balancing accounts and double entry and things that you're really good at. Okay, now we're on what happened during year one. So our year one story is inside here. On the 1st of the 9th, truck one was traded in against a new vehicle. Okay, so truck one we had for the first 8 months. Okay, so January, February, March, April, May, June, July, and August, 8 months. The RU we had for 8 months because that's attached to truck one. And then we bought truck four, traded in against a new truck four costing 82,000. So we would have had that for 4 months. Okay, so we've got to have 8 months here. We're going to have 8 months here. And we're going to have 4 months here for this guy. Okay, and then these guys, nothing exciting happening for these. We have them for a year and a year. Okay, so nice and straightforward for these. Okay, so make sure you read that super carefully so that you don't make any mistakes. That allows us to to calculate our number for the P&L depreciation number. So it's going to be 8 months. It's going to be our full charge for the year for vehicle number one, which is 990 divided by 12 and multiplied by 8. So we have it for 8 months, 6,600. For our RU, remember, it's 24,000 multiplied by 10% divided by 12 and multiplied by 8. So different percentage, different way of calculating depreciation for the RU, and then we only have it for 8 months of the year. Truck two, no bother. We had it for the full year, so we're able to just take the 12,240, the annual charge, the cost less the scrap, divide by 5. The same with truck three, nothing happening there exciting, 12,960. And then for truck four, we had it for 4 of the 12 months. So truck four, again in our little table over here, we've calculated what an annual charge would be. And we're going to divide it by 12 and multiply it by 4 months of the year. Okay, so 4,920. So we have our P&L calculation for each of our assets now. And we're going to add it up. And I want you all to be in the habit of highlighting our P&L numbers in pink all the time. So nice pink for P&L there for our 38,320. We sold 2 of these, so they're going to be going to the disposal account. It's going to be 0 closing depreciation on them. Okay, the amount that we're going to put to the disposal account is the opening depreciation plus the 8 months for this year for both of these guys. Okay, so I'm just calculating in my table the amount that we're going to need for the disposal account when we do it there in a while. Okay, so we got rid of vehicle 1 and the RU. Then I am also going to calculate my closing depreciation for the assets that I kept, because if I sell any of those in the next year, I'm going to need that information. So I just fire that in there for the moment. And that is our table 1 completed for year 1. Okay, so let's just take a pause here and see where we're at. Perform the year 1 table first, and then we'll enter it, and then we'll do year 2. Counting the age of the asset is where we make lots of errors. Please use your fingers, okay? Please use your fingers, and please put that closing date up the top here above your age. You're counting from the day it was bought up to the 31st of the 12th, 2021, okay, for this question, because they're asking us for 2022 and 2023. Okay, so put that up there to help you count up there using your fingers, okay? Count all of your year assets. So do all of that asset counting at the same time and take your time. Take care when calculating the depreciation for the P&L. That was very tricky. Okay, it was very, very tricky this time around because you had to deduct the scrap. It wasn't a straightforward multiply by 10%. And then I suppose just remember the RU will have a different depreciation calc. So just tackle that separately. Do all the others first, do the RU then. Okay, and then you'll be great. Then we go to our double entry. Okay, so we're going to do all our double entry for year one together. Same as ordinary level. Into the opening balance, perform additions, perform disposals, balance your account, go again. Okay? Balance account. Sorry now. Probably had that written already anyway. Enter your depreciation, balance your account, go again. Okay, so we're just following these steps exactly like we did in ordinary level. So we're going to do this at pace now, guys, because you're used to this from doing the ordinary level. The challenge for higher level students is to be able to create that table and to get the numbers that we're going to actually enter. That's our challenge. So the first to the first, 22, apologies. Ooh. So, all right, first to the first, 22, balance BD. Remember, it's all the vehicles except vehicle 4. So 219,000. So truck 1, the R2, truck 2, truck 3, truck 4. No, truck 2, truck 3. Do not include truck 4 because you didn't have it at the start of the year. So that's our opening balance for there. And the same provision for debt. Bringing it from our table. Okay. So it was for all the things that we calculated there up to the 1st of the 1st, 2022. Enter opening balances. Perform additions. Okay. So we bought, on the 1st of the 9th, we bought truck 4. Truck 4. Okay, and I think it was a trade-in allowance actually, so I might be saying bank trade-in. Yeah. Okay. And then we got rid of truck 1 and truck 2. Okay, so truck 1, truck 2. We're going to do the disposal for truck 1 and the RU. Okay, so when we're doing a disposal, guys, there's several steps for it. We got to take the cost of the asset out of the asset account. Take all the depreciation to do with that asset out of the depreciation account, and we're taking both of those to the disposal account. Then we put in the proceeds of the sale, then we calculate the profit or loss and disposal. Exact same as if it was ordinary level question. Okay, so on the 1st of the 9th, 22, we're going to disposal, and it's going to be the cost of the assets. So it's the 55 plus the 24, so 79,000. So it's the 2 vehicles are coming out. So the 55, the truck 1 and the RU. Please forgive me for keep saying vehicles. I just can't not say vehicles. Okay, so it's the 2 of them together. So we're crediting the truck account and we're debiting the disposal account. So the 1st to the 9th. Truck. Then we're going to take all of the depreciation to do with that asset. 19. All of the depreciation to do with that asset is coming out. You can pull that straight from your table now. That's your 42,900 and your 12,000. Okay, so it's your opening accumulated depreciation plus your P&L debt for the truck, and then your opening balance for the RU and your P&L debt for the RU. So the 4 of those added together, 54,900. All of the depreciation relating to the assets that were sold coming out of the provision account, reducing it by debiting it because it's a liability account, and finishing off your double entry by putting it into the disposal account here. Hitting buttons left, right, and centre now. Forgive me. Alrighty. Lovely. Then we have to go back to the question and see what did we get for it. Truck 1 was traded in for 20,000. Okay. So 20,000 is what we got for it. So we're going to have a bank situation for bank/trade-in. of 20,000. And then we're in a position to calculate if we made a profit or a loss on disposal. So remembering, guys, there is no balance CD or BD in a disposal account. The purpose of a disposal account, purpose of a disposal account is to calculate whether you made a profit or a loss. Okay, so the reason we do them is to figure out if you made a profit or a loss on a disposal. It is not to do a balance CD, balance BD situation. Okay, so we're going to add up both sides to decide which side is the biggest. 79 is the biggest in this situation. Okay, so it means we've made a loss on disposal actually. So 79 balance, or the number that we will be putting, apologies now. So our missing number here. So our missing number here, our big side minus our small side, is a loss on disposal. 4,100. Okay, so we've got a loss on disposal for the first disposal that we're doing. So going back to our steps, okay, enter your opening balances, perform the additions, perform your disposal, okay, enter your depreciation. Okay, so we're entering our depreciation is our next step. So up here to our depreciation account, always in the last day of the year, 31/12/22, P&L debt. We calculated the value here in our table, nice pink number, in we go. Then we're ready to balance our accounts and go again for the next year. Okay, so as fast as you can balance your accounts, guys, be really efficient with the balancing of your accounts, because it's a place where we can make lots of time. Have a nice big calculator, keep it flat on the table, get really fast at entering your numbers. It's a skill that's so worth practicing. You will do so much of it the day of your leaving cert. Balance BD below the total on the opposite side to balance CD. 71,340. We're going to balance our truck account here now as well. Oops. There's a separate video on balancing accounts. Anybody who's wants to do a bit of practice on that. Both the total on the smaller side, last day of the year. Below the total on the opposite side. Okay, that is year one done. It's in the bag. Okay, so our table is done, our asset account is done, provision for depreciation done, disposal done. We have followed our steps. We will not miss anything. Enter opening balance, perform additions, perform disposals, enter depreciation for the year, start again. Okay, so now we're on to year two. So what do we have for year two? We have truck two, truck one and the RU are gone. We've got truck three, truck four. And then in our question, we can see that we get rid of truck three and that we're going to buy a new truck, truck five. Okay. We don't care about the age of the asset now because we have the accumulated depreciation for all of these guys. Okay. We don't actually need the cost number in this question either for these guys because we're not calculating a percentage of cost. So you don't actually need to enter that in this one. If it was straight line calc off as a percentage of cost excluding scrap, you would fill it in there. We can leave that off for the moment. I'm going to put in my opening accumulated depreciation for truck 2 and truck 3 and truck 4 because I'll need them if they got sold. Okay, I have no opening depreciation for truck 5. And now I'm going to calculate my depreciation for these guys during the year. So we have truck 3 for the first 3 months of the year, because we sold it on the 1st of the 4th. And that means that we've got truck 5 for 9 months of the year. Full year, full year. Okay, so now we're going to calculate our depreciation. So truck 2 is just a full year. So I'm going over here to my table. Truck 2, here we go, 12240. Truck 3, I only had it for 3 months of the year. So I'm going over here again. Let me hide that for the moment. 26 there now. Hide that. Going over here to our little table where we calculated our depreciation. So truck 3, we had it for divided by 12 and multiplied by 3 months of the year. So we only had it for 3 of the 12 months of the year. Truck 4, we had for the full year. And truck 5, we had it for divide by 12 and multiplied by 9 months of the year. Okay, so we only had it for 9 of the 12 months of the year. So again, read those questions super careful, guys. We really don't want to be making any silly errors on that one. And when you're under time pressure, we really, really do, you know. Now, for our disposal situation, we're getting rid of truck 3. So we had an opening depreciation and we had a P&L dep number. So the total depreciation in relation to truck 3 is 23,760, and you're going to need that when we're doing our disposal, when we do our double entry. Okay, so we're now good to go with following our steps. So enter opening balances, we balanced our accounts, that is done. Perform additions. So we're going to do the addition of truck 5. Okay, so going back to our question, on the 1st to the 4th, 2023. So 1st to the 4th, it's very important that you enter your dates and that you enter them correctly. There is always 1 or 2 marks going for random dates in the question, and we need to make sure that we're getting all of those nice easy marks. Okay, so we bought truck 4, and truck 4 cost 88,000. Okay, so we had a crash, bought a new truck, 88,000 coming in. Yeah. So perform additions. Lovely. Perform disposals. So we're getting rid of truck 3. So truck 3, 72,000. I'm just going to put that in there to help me so I don't make a mistake. Okay, so we're doing our disposal steps. Take the cost out of the cost, take the depreciation out of the provision account, put in the proceeds, calculate the profit. Okay, so on 1st to the 4th, the cost is coming out 72,000. A credit to the disposal account, a credit to the asset account, and a brand new disposal account. Each disposal gets its own account because the purpose of it is to calculate whether there was a profit or a loss on disposal for that particular sale. So each one gets its own individual one, truck. Then take all of the depreciation relating to that asset. So truck 3, we calculated it there a minute ago. It was the opening plus the P&L dep. So 23,760 coming out of here on the 1st of the 4th, 23, disposal. A credit to the provision account and a debit to the disposal. Sorry, a debit to the provision account because it's a liability going down, and then perform the opposite part of your double entry. Please do those double entries together. Don't do one side and say that I'll come back and do the other one in a minute, because you will forget. Okay, so just do your double entry, credit one, debit the other for the asset and the provision. Don't not finish it because you will forget it under time pressure. Then we're going to look and see what are the proceeds of the sale. So truck 3 was crashed and traded in against a new truck costing 88,000. The company received compensation to the value of 26,000 and the check paid for the new vehicle was 65,000. So there's two parts to this. The first part is the compensation of 26 and the second was a trade-in allowance. So we'll do the first one first. We got compensation, so bank of 26,000. And the second part is we got a trade-in allowance or a discount on the new truck. So the new truck should have cost 88,000, but we only paid 65,000. So it's going to be the difference between that. So 88,000 minus 65,000. So we got a trade-in allowance. So we're going to say truck / trade-in of 23 grand, which is very nice. Okay, so now we're going to balance this guy and see if we made a profit or a loss on disposal. So I think we made a profit on disposal of this one. Okay, so you're adding up both sides, decide which side is the biggest. Decide that it's the biggest, the total on both sides. There's no balance CD in a disposal account. Your missing number is the profit or loss on disposal. So this is a profit on disposal because it's on the debit side. Okay, so 760 profit on disposal. So then we got to do our final step. Okay, so you rattle through these steps in your head all the time, guys, so you don't miss any. So opening balance, addition, disposal, enter your depreciation for the year. Okay, so do not forget to enter your depreciation for the year. Sometimes, because we're getting tired, we can forget. Last day of the year, P&L day, every time. The value is the amount you calculated on your table. Make sure to bring your value from table 2. Don't accidentally bring it from table 1 because you're tired. So just be mindful and mind yourself in the middle of it all because your brain does get tired as you go along. Then we're ready to balance our accounts. Okay, so paste. I need you all to be crazy fast at balancing the accounts and to not require any brain power when you're doing it, because this is your recovery time when you're doing what I call your admin tasks. So the things that shouldn't require the tiniest bit of your working memory to do. Give your brain a break. Lovely. And we're going to do the same with our truck account. So balancing our truck account. I'm just going to take this on here. It's going to be faster for me. So balancing our account. Okay. Happy days. Right, so let's just go back and revisit our question. Truck account, 6 marks. Thank you very much. Provision for depreciation, 32 marks. That is the bulk of the marks, and it's going for the calculations you've done in your table. The truck disposal account, 14 marks. Okay, they didn't ask us here for the extract. Okay, but I'm just going to do it just in case they did in another question. Because sometimes we can be asked for the balance sheet extract, and it's really easy, right? So you're just taking a snippet of your balance sheet account. Cost, cumulative depreciation, net book value. You're going to have trucks. You're just taking your balance BDs. So trucks. So our balance BD on the truck account for 2024 is 238,000. The balance BD from our provision or accumulated depreciation account, 89,700. So our net book value is 148. Okay, so really nothing difficult in that. So if you got it, we'd be very happy with it. Final thing then, guys, bit of theory. Why do companies charge depreciation and calculating profit, and explain the term useful economic life? Please learn your theory. I want you to get into the mindset of thinking that one sentence equals 1 mark. You have to write a lot in accounting to get the marks, and you have to use financial literacy and good use of financial language, and link it to the question above. For example, this company, Cobra Trucking Limited, has a 5-year useful economic life in relation to its trucks. So you'd get a mark for that, hopefully. Okay, hopefully you found that useful, and good luck with it. So a little recap on our steps before we finish. So know your table, create your table, lay out your page really well, have your ruler, your calculator, everything around you. Calculator should be flat on the desk. Big calculator, don't be lifting it up and putting it down, it's wasting your time. Get really skilled at doing that. Lay out your table, lay out your double page, tables on the left, asset account beneath it, provision top of the right, disposals below it. The place where you're going to be made and lost is in your table. Okay, so be very, very careful with your table. And then read the question very carefully, remembering that this year was super tricky, okay, because they gave us a useful economic life of 5 years and told us there was a scrap value of 10%. So we had to deduct the 10% and then divide by 5 for each of our assets. And the RU did not follow that policy. It was doing its own thing. First 2 years at 20, thereafter at 10. Okay, do your double entry when you're doing your disposals. Reduce your asset, credit your debit your disposal. Reduce your provision and put it into the disposal. Okay, so do your double entry, and that's it. Best of luck. The more you practice, the faster you'll get. Use your fingers when you're counting the age of your asset. Thanks so much, guys, and best of luck with it.